Welcome back. Another stock you should keep on your radar today is Wipro. It's down nearly 1%. All of you would have read in the papers today that Wipro has announced that the freshers who will be joining Wipro now are going to be given sharply lower salaries. Earlier, the freshers who had committed to joining Wipro were promised salaries per annum of 6.5 lakh. Now they're saying, join us, but you have to join us at 3.5 lakh. If you don't want to join, then don't join. So this is a sharp 50% cut, right? And everyone's wondering what exactly happened, because this is very bad, public relations, PR. Optically, it doesn't look good, because how much are you going to save by cutting down on the fresher salary? Anyway, the salaries are not very high to begin with. A bulk of the hiring perhaps has already taken place at the beginning of the year. So how much are you going to save, right? And it just goes to underscore the demand and the supply side situation that IT companies are in. Remember, IT companies make plans to hire in advance. The offer letter is given to you well in advance. At that time, you're anticipating a certain demand environment. That demand environment has changed in the last 6 months, and the supply side situation has also changed drastically. Now remember, Wipro per se, their growth is not very high. In fact, in Q4, they're guiding for the possibility of negative growth. Their guidance for Q4 is minus 0.6 to 1% growth, right? So best cases, they're going to see flat growth, right? So if you are seeing flat growth, then why even pay that balance, why even pay, an extra bit of salary to the freshers? That's what analysts are saying. Also, their margin performance has been lesser compared to peers. There you have it. Wipro's margins are lower than peers. So according to analysts, that at a time when growth is scarce, growth is moderating, the company is wanting to focus on their margins, which is why they are cutting costs wherever it is possible. On the flip side, that's on the demand side. On the flip side, attrition has been moderating for the company. Their utilization level is the lowest in the last 12 quarters. The company said we've hired a lot in the last couple of quarters. Our employee headcount has gone up by 45% in the last 10 quarters. We've increased in size, and now we want to utilize the existing bench because that is currently underutilized. So it's a combination of both those factors, but just purely optically, it doesn't look good when any company comes out and goes back on its promise of the salaries that they had promised to the freshers, because ultimately, how much can you save? Mehraboon, thoughts on these kind of headlines? Would you be worried that perhaps this is a sign that demand is slowing down much more than what the street was earlier anticipating?
Well, I think the clear conviction of mine last year was sell IT by PSU banks. And I think what PSU banks did, IT did the opposite. If you look at the 52-week highs of most of the frontline stocks and even the mid-cap IT stocks, you'll understand what I'm saying. They're sharply lower than what they are, coming to Wipro specific. I think if you look at the numbers for quarterly 3 and the management commentary, if you put them together, there is a clear-cut confession of the fact that there is a softness in demand as discretionary spends are seeing a major slowdown. The deal wins were at a record level in quarterly 3, but if you look at these deals with the advance, most of them were large deals. And those large deals, I think the ramp up which took its own time for them to come. It was expected to come maybe at least 1 or 2 quarters before that. It took its own time. The company has rationalized subcontracting of cost. That means they can hire as and when required when demand picks up. That is what indirectly they are trying to say. And this morning's incident, what has happened. So I would say that the only thing in favor, I think, of Wipro right now would be the stock price. The stock is trading near its 52-week low and much, much, much lower than its 52-week high. While the margins are lower than its peers, the point is people in defense of Wipro will say the stock is also quoting at a valuation of at least 15-20% cheaper than what its peers are being quoting at. But is that reason enough to go and buy into it? My answer would be a clear-cut no. First of all, the demand outlook is not very good. And Wipro, let's be honest, over the last 3, 4, 5, 6, 7, 8 quarters has normally reported numbers which have failed to meet muted expectations. So while the stock price could be the only thing which I would say is in defense of Wipro right now, it's going at around 16, 17 times FY24 earnings, a discount of 15 to 20% in its peers. But I would still say that there is no reason why one should be in a hurry to go and to buy into Wipro stock. People may say it's cheaper than Infosys or TCS in valuation terms, but honestly, there are not any triggers which one can see in the near future for one to be in a hurry to go and buy it of Wipro. So certainly a clear ignore from my side.
Okay, Mehraboon, it's a pleasure as always. Thank you very much for your time and good speaking with you.
Thanks,
Thanks indeed.
Thanks.
Thank you. Well, 40 points lower on the Nifty is what we have. Now we're at the low point of the day. So 17,800 is the low. We're at about 17,804. And I think you got a similar kind of picture, not quite on the Bank Nifty. The low on the Bank Nifty is 40,508. We are at about 40,619 or so. The Nifty, yes, at the day is low. The Bank Nifty, not quite. Our Alpha Manager of the day is with us. Amit Gupta is Vice President and Fund Manager at ICICI Securities. Amit, it's always a pleasure having you with us. Good speaking with you. So tell us, Amit, where are markets headed? First of all, directionally, do you have a firm view that this will be a risk-off